Okay, let's unpack this one. We've got quite a fascinating look today at a company that's really been a cornerstone of the Indian auto industry for, well, decades now.
Yeah, a long time.
And, it's not just about pistons anymore, which I found interesting.
Not at all.
So you're joining us for a deep dive into Shriram Pistons and Rings Limited, or SPRL. We've got their company overview documents and a pretty recent investor presentation right here.
From Q4 FY25, yeah.
Exactly. And our mission today is, well, to really get under the hood, understand what makes SPRL such a significant player. We'll look at its history, its business lines, future plans, financials, the whole picture.
And what's fascinating, really, right from the start, is seeing how a company that, built its name on traditional engine parts.
Pistons, rings.
Precisely, how they're strategically reshaping themselves now. It's quite a shift.
Towards what exactly?
Well, towards a much broader portfolio. We're talking
Yeah.
EV tech, electric vehicle components, and also high-tech precision molding. And it doesn't feel like just a reaction to market changes. It feels more proactive, a strategic stance in a landscape that's changing fast.
Right. So where did it all begin? Take us back.
Sure. So SPRL's journey, it actually goes back to 1963. It started as Shama Pistons and Rings Ltd.
Sona Pistons, okay.
Yeah. Then a key moment came in 1972. There was a management change. Dr. Charit Ram came in, and it was rebranded to Shriram Pistons and Rings Ltd. SPRL.
Got it. 1972. And from there?
Well, from there, they just systematically expanded, broadened their offerings to cover, a really impressive range of vehicles in India.
Like what sort of range?
Everything from your regular passenger cars, to heavy commercial vehicles, trucks, buses,
Right.
then two-wheelers, three-wheelers, tractors for agriculture, even stationary engines. So a really wide application base.
Okay, so a real veteran, like you said, decades of experience across the board. But as I mentioned, it's not just about that traditional stuff anymore, is
No,
it?
that's the exciting part now.
This is where it gets really interesting for me. These bold moves they're making. It feels like they're stepping firmly into, well, the future of the industry.
I agree. They're not just dipping their toes in.
No. I mean, we're talking electric vehicles, high-tech plastics. Looking at the timeline here, 2023 seems like it was a pivotal year.
Absolutely. Busy year.
Yeah, they acquired SPR EMF Innovations. That was their big entry into EV components, right?
Yes, the one. Motors, controllers, the whole package.
And also SPR Takahata Precision India in the same year.
Yes, bringing that precision injection molding capability in-house, based in Nimrana.
And didn't stop there. Just this year, 2024, they picked up TGPL Precision Engineering.
Right, doubling down on that plastics and non-traditional side.
So the key takeaway here, it seems to me, isn't just they bought some companies, it's what they bought. It looks very strategic, targeting these future-facing technologies, even looking beyond automotive maybe.
That's exactly it. It shows a clear vision beyond just, the pistons and rings business, as important as that still is.
Okay, so let's talk about that foundation first, though. The traditional stuff.
Right. So their foundational business, pistons and piston pins, that's still absolutely crucial, especially now with the latest BSVI emission standards in India.
Right. Those require more advanced engines.
Exactly. Things like GDI gas keen direct injection and MPFI multi-point fuel injection systems. Their components cater specifically to those.
And the rings and valves.
Yeah, they're producing high-performance piston rings, using advanced materials for better durability, longer life, and engine valves too, often custom designed, built for high resistance.
Okay, so the core is still strong and evolving, but like you said, the diversification is the really compelling story now.
Yeah.
Tell us more about the EV side, SPR EMF Innovations.
Sure. So through SPR EMF, they're now designing and manufacturing electric motors and the controllers that, manage the power flow.
What kind of scale are we talking?
It's quite a range. From smaller 250-watt units, think electric scooters maybe, all the way up to powerful 300-kilowatt systems.
Wow, 300 kilowatts is serious power. What would that be for?
Yeah, that's suitable for much larger vehicles, like electric buses or commercial vehicles.
Okay. And where are they doing this?
They've set up R&D and manufacturing hubs in both Coimbatore, down south, and also in Singapore.
Singapore, too. Interesting.
Yeah, and the production capacities they've outlined are pretty substantial. We're talking hundreds of thousands of units per year across different motor types. BLDC hub motors, mid-drive motors, controllers, PMSM motors. Significant numbers.
Okay, so a serious commitment there. And then there's the other diversification, the precision injection molding side. SPR Takahata?
Right. SPR Takahata Precision India, operating out of Nimrana, they specialize in those really intricate, high-precision molded plastic parts and assemblies.
Not just the parts, but the molds, too.
Yes, and the metal molds used to make them. They serve both automotive think components for things like power windows, wiper motors, door locks, seat belts, even complex parts for ECUs, the engine control units, and steering systems.
Okay, so quite integrated into the vehicle systems.
Very much so, but also the electrical and electronic industries, supplying parts for relay boxes, sensors, headlamp assemblies, to major tier ones like Hitachi Astemo and Denso, big names.
And TGPL strengthens this further.
Exactly. TGPPL adds more capacity and offers sort of an end-to-end solution for plastic injection molds, design, manufacturing, assembly. And crucially, it pushes them further into non-automotive sectors too, like consumer electronics, FMCG, even medical equipment.
Interesting. So you mentioned fungible lines earlier in the context of manufacturing.
Mm.
Just quickly for our listeners, what does that mean in simple terms?
Good question. Yeah, fungible lines basically means they have the flexibility to switch production between different types of products fairly easily on the same manufacturing lines.
Okay, so they can adapt quickly to demand changes.
Exactly. That flexibility is a real asset, especially in a dynamic market.
So with this strong core business and these new ventures, where does SPRL stand in the industry?
Well, they're undoubtedly a market leader in their traditional core segments, pistons, rings, etc. And importantly, they enjoy industry-leading profit margins there.
Which suggests efficiency, strong pricing power.
Both. It speaks volumes about the efficiency of their operations and the demand for their products. But what really cements their position are the significant barriers to entry in this industry.
What kind of barriers are we talking about?
It's several things. First, sheer scale. Their large operations give them major cost advantages. Plus, automation. They also have 5 assembly units strategically located, which allows for just-in-time delivery to customers.
Which is critical for the big automakers, the OEMs.
Absolutely critical. Maintaining those strong relationships with major OEMs, being a tier 1 supplier, that's a massive barrier in itself. And then there's the aftermarket. They have a dominant presence there with their own brands, SPR and USHA. That provides a steady revenue stream too.
So it's not just size, it's deep roots.
Exactly. Deeply embedded relationships, decades of know-how, and this proven ability to adapt. It all points to a very resilient business model.
And it's more than just relationships and scale, right? There's a technological edge too.
Definitely. That's another key barrier. They have a dedicated R&D center. They're actively innovating in areas like ethanol blending for fuels, looking at other alternate fuel applications.
Hydrogen, CNG, biofuels.
Right. And they hold patents for some of their technologies. That manufacturing flexibility we mentioned, the fungible lines, that's part of it too.
And the partnerships.
Crucial. Those long-standing strategic technology partnerships with global leaders, Kolben Schmidt from Germany, Reiken from Japan, Honda Foundry, Fuji Uzex. These give them access to world-class technology and expertise.
There's a cost to that, though, right? The royalties.
Yes, there is. The report mentions royalty payments around 1.5% to 2% of revenues for accessing some of that tech, but it's arguably a necessary investment to stay at the forefront.
And the recent acquisitions like Takahata, EM5, TGPL, Karna Intertech, they all feed into strengthening that tech base too, especially in the newer areas.
Precisely. Each acquisition seems very targeted to bring in specific capabilities, whether it's EV tech, precision engineering, or even securing the supply chain, like with Karna Intertech for casting molds.
So what all these moves, this market position, seem to highlight is, like you said, a proactive approach. They're not just waiting for the future, they're actively trying to build it.
That's a good way to put it. They're making calculated bets through investments in these strategic acquisitions.
So looking ahead, what's the overall future growth strategy?
It looks quite comprehensive, actually, multi-pronged. They're focusing on expanding both products and markets. Big emphasis on those alternate fuel solutions, hybrid, hydrogen, CNG, biofuels, and, of course, the EV components we talked about.
And expanding beyond auto.
Yes. They're explicitly looking at industrial, medical, and electrical applications, too, leveraging those new precision engineering capabilities.
And they're putting money into bricks and mortar to support this.
Yeah.
New capacity.
They are. That new plant down in Coimbatore for SPR EM5, the EV arm, that's slated to be operational by April next year, April 2025.
Okay, so that's coming online soon.
Yeah. They're also expanding in Nimrana, acquiring land right next to the Takahata facility, and their plant in Pithampur, central India, apparently has plenty of land for future expansion as well.
And that Pithampur plant, you mentioned something about Industry 4.0. For our listeners, what does adopting Industry 4.0 actually mean for a company like SPRL?
Right. Industry 4.0, essentially, it means they're building that plant using the latest smart manufacturing technologies. Think high levels of automation, robotics, using data analytics extensively, interconnected systems, the Internet of Things applied to manufacturing.
So aiming for much higher efficiency, better quality control, more flexibility.
Exactly. It's about optimizing the entire manufacturing process using digital tech. Plus, you combine that with the molding capacity from SPR Takahata and TGP Eel. They mentioned having 250, 300 molding machines together. It's a significant manufacturing footprint they're building.
And acquisitions remain a key part of the strategy.
It seems so. That inorganic growth piece is vital. The TGP Eel deal, finalized quite recently, seems specifically aimed at speeding up diversification away from traditional engines and even outside auto.
And it's expected to boost earnings quickly.
Yes, the presentation notes it should be immediately accretive to earnings per share, which is always good news for investors. And the earlier deals for Takahata and EFI were clearly about strengthening that transition towards an ICE agnostic future, less dependent on internal combustion engines.
So summing up the strategy, it's a balance of growing the existing business, pushing into new markets and products organically, and using strategic acquisitions to accelerate into high-precision engineering and EV tech, all backed by significant capital expenditure.
That captures it well, a balanced approach.
Okay, let's talk numbers. Because the strategy sounds good, but does the financial performance back it up? What do the recent highlights tell us?
Well, the numbers, especially for the full year FY25, look pretty strong. On a consolidated basis that includes the subsidiaries like Takahata and EM5, their total income hit about $36,612 million.
And how does that compare?
That's up a healthy 15% compared to the previous year, so solid top-line growth.
And profitability.
Also strong. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, a key measure of operating profit, was up 15% as well, hitting $8,357 million. And PAT, profit after tax, or net profit, grew even faster, up 17% to $5,156 million.
Okay, so growth is translating to the bottom line. What about the most recent quarter, Q4?
Similar story. Q4 FY25 consolidated income up 15.5% year-on-year, EBITDA up over 18%, and PAT showed a really strong jump, up over 30% compared to Q4 of the previous year.
Wow, 30% pedigree growth in the quarter is quite something. How about the standalone business, the core SPRL, without the recent acquisitions fully consolidated, perhaps?
Standalone figures also show positive momentum, though the growth rates are a bit more moderate, as you expect. Full year FY25 standalone income up about 8.2%, EBITDA up 9.6%, and PAT up 11.4%. Q4 standalone also showed decent growth.
So overall, the financial profile looks robust.
Yes, the presentation highlights strong metrics across the board. Return on capital employed, sales growth, cash flow generation, good margins, both gross and operating. They also point to low leverage, meaning not much debt, and efficient management of working capital.
So the numbers definitely seem to reflect the success of their strategy so far. The diversification seems to be contributing positively.
It certainly appears that way from these figures.
Okay, strategy and financials look solid. What about governance and risks? Always important to consider.
Absolutely. On the governance side, it seems reassuring. They're audited by Walker Chandiok, which used to be part of Deloitte Network in India, a reputable firm. No irregularities reported. Appears well structured. Diverse backgrounds noted, and importantly, representation from their joint venture partners, which suggests alignment. Transparency seems decent too. No related party transactions flagged outside of the normal subsidiary dealings. No reports of fraud or penalties from SEBI, the market regulator.
Leadership. Promoter holding.
Experienced executive leadership team. Promoter holding is around 43–44%, which is substantial, but leaves a high free float, meaning plenty of shares available for public trading. Management pay is mentioned as reasonable relative to profits.
Any signs of stability in the workforce?
Yeah, median employee tenure is over 6 years, which suggests a relatively stable workforce, and they've actually increased hiring recently.
Okay, sounds like governance is in order. What about the risks they acknowledge?
Well, the big one, obviously, is the potential long-term decline of the internal combustion engine, the death of ICE, as some call it.
Which they're clearly trying to mitigate.
Exactly. That strategic pivot towards alternate fuels, and especially EV components, is the direct countermeasure. They also acknowledge the cyclical nature of the auto sector. Booms and busts are common.
Sure, that affects everyone.
Right. And the other potential risk is making poor acquisitions or struggling with integration. Though, as we discuss, their acquisitions seem quite strategic and focused so far.
It does raise a question, though. With all this change,
Yeah.
how sustainable is their leadership in the traditional segments? Are they seeing new competition, maybe from players who are only focused on EVs?
That's a really crucial point. While their established market share, those deep OEM relationships, that scale it all provides a very strong foundation, a moat, if you will.
Right.
But the competitive landscape is changing, no doubt about it. You have new players emerging, solely focused on EV components, often venture-backed, very agile. They could certainly pose a challenge.
So how does SPRL compete there?
Well, their advantage is their early move into the EV space through those acquisitions, SPR EM5 in particular. They're not starting from scratch. They can leverage their existing manufacturing scale, their engineering expertise honed over decades, and crucially, those existing customer relationships with the big automakers.
So using their incumbency to their advantage in the new space.
Exactly. Their ability to adapt their production, cross-sell components, and offer integrated solutions will be absolutely key as this transition unfolds. It won't be easy, but they seem well-positioned to compete.
Okay, moving beyond just the business and the numbers. Increasingly, companies are judged on broader responsibilities. ESG, environmental, social, governance. How does SPRL stack up there?
They appear to be taking ESG quite seriously based on the presentation. On the environmental front, their plants are ISO 14001 certified for environmental management.
That's standard practice for many large manufacturers, isn't it?
It is, but it's a necessary baseline. What's more notable is that 3 of their plants have achieved zero liquid discharge, meaning they recycle and reuse basically all the water they use in their processes. No wastewater discharge. That's a significant achievement.
Okay, that's impressive. What else environmentally?
They're actively increasing solar power usage, pretty high percentages in some plants, 30% in Ghaziabad, 40% in Bulandshahr, installing capacity in Pithampur. They're also tracking and reporting their sustainability data through recognized platforms like CDP and EcoVadis. And they push this down the supply chain too, mentioning 95% of critical suppliers are environmentally compliant.
So a focus on their own footprint and their suppliers. What about the social?
Yeah, strong emphasis there too. Worker health and safety seems paramount, which is critical in manufacturing. They promote inclusion and diversity, invest in skill development for employees. Specific programs for women's empowerment are mentioned.
And community engagement?
Yes, things like mobile medical vans, providing healthcare access in nearby areas, charitable dispensaries, reaching out beyond the factory gates.
And the due governance, we touched on it, but anything specific to ESG governance?
They have a dedicated ESG steering committee overseeing these efforts, a formal enterprise risk management framework, strong ethics framework. They even use a digital platform, apparently from KPMG, to manage their ESG data. And they've won awards like the Golden Peacock for good corporate governance.
And they've set targets.
Yes, quite ambitious ones. Reducing energy consumption, emissions, water intensity, increasing renewable energy use, use of recycled materials, aiming for 100% water recycling and zero waste to landfill eventually.
Okay. And on the social side, specific goals too.
Focus on reducing employee attrition, increasing training hours, ensuring safety. They mentioned ISO 45001 certification for occupational health and safety, and winning a Sword of Honor for Safety, which is a prestigious international award. Water positive initiatives, too.
And their broader CSR, corporate social responsibility.
Seems quite active. Initiatives across healthcare, education, environment, rural development, skills training, sanitation. They report a significant CSR spend and reaching a wide number of beneficiaries. So it appears to be a well-rounded commitment.
Okay, so wrapping this all up, let's try to summarize our deep dive into SPRL. What are the key takeaways for you?
Well, first you have this long, impressive history, a real stalwart in the Indian auto components sector. But crucially, they're not resting on their laurels.
Right, that strategic diversification is key. Moving decisively into high-growth areas, EV components, precision injection molding.
Exactly. Leveraging their strong market position in the core business, those high barriers to entry, talked about scale, relationships, tech.
And the financials seem to back this up, showing robust performance, plus a clear commitment to sustainability and good governance practices.
And clear future growth plans, blending organic expansion with these strategic acquisitions, all geared towards navigating the massive shifts happening in the automotive world.
So for you listening, this deep dive really gives a comprehensive picture of a key player adapting, evolving, and looking very much towards the future. It highlights their adaptability, their forward-thinking approach.
Yeah, it's quite a transformation story unfolding, which leads to perhaps a final thought to leave with you.
Go on.
Well, given SPRL's really aggressive diversification, especially into EVs, and considering the, let's say, uncertain pace of EV adoption, specifically in the Indian market, it raises an interesting question.
Which is?
How will their traditional, established, and still very significant ICE business, the pistons and rings, interact with these newer ventures in EVs and precision plastics? Will we see powerful synergies emerge, giving them a unique edge? Or could there potentially be, internal competition for resources, for focus, as these different parts of the business evolve in the coming years?
That's a really interesting dynamic to watch, how they balance the old and the new.
Exactly. How those two parts of the company work together or maybe even compete in the years ahead. That's definitely something worth mulling over as you watch the broader trends play out in the whole automotive sector.